Hello, it's a rather wet Tuesday the 10th. I'm FxPlew and this is the market brief. So Huw Pill's been on. He's the Chief Economist at the Bank of England, and he reiterated his belief that short-term interest rates will continue to rise in the UK. That is as the central bank remains committed to bringing inflation back under control. And despite fuel and energy prices pulling back a bit, which should see headline inflation fall a bit, but core inflation continues to raise concerns. And lest we forget, the MPC remit is to target 2% as a headline inflation number, so they've still got a long way to go. And just to sprinkle that outlook with a little more joy, we were reminded that the MPC expect a recession to last about a year. Happy days. The government held talk with the unions yesterday. They met with railway workers, nurses and the teachers to try and find a solution to the current strike action. Reaction was disappointing when talks broke up with questions over the government attitude to compromise, especially for the current financial year. Over in the US, the Fed remains pretty bullish on tackling inflation, despite the moderation seen in the recent data. We had a 50 basis point rate hike in December, but Powell's press conference confirmed that they remain vigilant over inflation, particularly where the employment market remains uncommonly strong. Friday's non-farm payrolls underlined the residual strength in the employment market. So financial market sentiment expects another 50 basis points when the Fed meet on February the 1st. Fed member Bostic is sticking to his guns, because of the glue. Anyway, he believes that the economy is unlikely to suffer a recession this year. That said, he did acknowledge that there may be 2 consecutive quarters of mild contraction, which, as we know, is the technical definition of a recession, but he sees this as inconsequential and as a result doesn't warrant the use of the R word. He sees rates peaking at a minimum of 5%, and he thinks that rates will need to remain at or above 5% for quite some time to engineer the soft landing that we're all hoping for. Meanwhile, in the market, sterling is struggling to shake off a sense of lethargy as it looks for drivers to set a new trend in the new year. We touched 122 against the dollar as the dollar index slipped back below 103 yesterday. We open around 121.60 against the dollar. We're about 113.30 against the euro, and euro dollar is about 107.30 this morning. Right, that's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.